Hello Thầy, we are group number 16. This is our final presentations. Uh, First, let me introduce to you our 10 stock in the watch list, and we have 10 industry. In each industry, we choose a stock to analyze. First is the bank industry. 2021 has been a difficult year for bank industry. As a result, the loan demand and the repayment abilities of both businesses and individuals fell. However, we indirect expect banking to be the representative of the economic recovery in the following years. In this year, military commercial joins SoftBank and as big goals, which are become the top bank in digital banking, top three in the retail banking, and top five in commercial banking in terms of qualities and efficiency. The bank also reported accumulated pre-tax profit in the first 9 months of the year, reaching more than 11 billion Vietnam dong, thanks to the steady growth in all operating segments. Additionally, its parent company's shareholders after-tax profit is expected to reach more than 15 billion Vietnam dong in 2022 as a result of digitalizations. The next industry is the technologies and telecommunications. The importance of technologies grows considerably in the 4.0 age in the years, and FPDs is concentrating on achieving its long-term aim of becoming a digital enterprise and ranking among the top 15 global provider of full digital transformation services and solutions around the world in 2030. The company had net revenue of more than 8,000 billion Vietnam dong in the third quarter of the year. The technology revenue grew 22%, and the pre-tax profit also increased 30%. In the years of 2022, we indirect expect that the worldwide trend of digital transformation will be strong, which will become a great opportunities for FPDs. That's why FPD's gross profit margins is expected to grow even more. The next industries in our watch list is the basic material. Hoa Sen Group has only been pioneers in investing in modern equipment and applying new technologies in productions. In this year, Hoa Sen Group revenue was estimated at more than 48 billion Vietnam dong, and the profit after tax also recorded at more than 4,000 billion Vietnam dong. Additionally, FAMAS believes that Hoa Sen Group's export segment is going to expand in 2022 due to electricity shortage of China and China's Thai's emissions regulations. The next industry is the renewable energies. In the last 5 years, the demand of electricity in Vietnam has grown averagely 10% per year, and consequently, the need for an environmentally friendly economical source of electricity also follows up. The Bamboo Capital joint stock companies is a competitor in this industry. The company has net revenue increased approximately 56% year on year. The profit after taxes of the company also rose 16.8 times compared to last year. The most impressive one is the 172% growth rate in the price per share. Moreover, the corporations also signed a contract with Singapore Powers Group, to start projects in rooftop solar power with the capacities of 500 megawatts in 2022, based on the new series of projects in the renewable energies industry such as floating solar, wind power, and liquefied natural gas, with the capacity of 2 gigawatts in 2023, would drive BCG to be one of the most potential stock in our market. Next is German Debt Corporation's from port transportations. The high volume of supply chain shift to Vietnam guarantee for the increase in shipping demand. In 2020-21, the economy of Vietnam was strongly affected by the COVID-19 pandemic. However, the logistics industry still stays solid and potentials in the years. In 2021, German Debt achieved impressive successes such as revenue revenue reached more than 2,000 billion Vietnam dong. The profit after tax also recorded more than 500 billion Vietnam dong in the first 3 quarters. Moreover, the conditions of Trinidad, the biggest deep water port of Vietnam, is a big opportunity for Trinidad to increase its market share in the following years. Next one, let's come to rubber industry. Vietnam has been well known for exporting industrial crops like coffee, pepper, cashews, and rubber is also one of them. Phước Hòa joint stock companies has recorded a total revenue approximately 522 billion Vietnam dong in the first 3 quarters of 2021, and the profit also rose 3.5 times compared to the same period last year. In spite of the downward trending of the company revenue, many experts expected the price of rubber to rise, and together with the lending of 34 hectares from the Tông Bình Industrial Park projects and Tông Lập Quan Industrial Park projects will motivate DXR profit in the following years. Moreover, DXR simultaneously benefit most in the increase in demand of industrial estate in the blue profit. Next one is our candidate from agricultural chemical. Petro Vietnam Cà Fertilizer Joint Stock Company launched Cà Fertilizer plant on 26 October 2012. The project was the most sophisticated granular urea fertilizer plant of Vietnam, and it also is the third project in the gas power fertilizer value chain. At the end of the 3rd quarter of 2021, VCM recorded a profit after tax increased by more than 265%. And moreover, regarding of the financial plan, the company expects total consolidated revenue in 2022 to reach more than 9,000 billion, and the profit after tax reach more than 500 billion Vietnam dong.
Hello everyone, my name is Thanh Bình. I will introduce you to Lab Company in the stock watch list. So, it is the Inmestpharm Corporation (IMB). The current medical demand applies where as a result of ongoing COVID-19, so the pharmaceutical industry could be a lucrative target for the investor. The manufacturing and trading pharmaceutical products, as well as importing and acquiring packaging materials, are Inmestpharm core business. The IMB announced 11 months of 2021 business results, including revenue of 1.1 trillion dong and a pre-tax profit of 202 billion dong. The next company is the SSI Securities Corporation. The stock brokerage service has also readily become familiar and developed in Vietnam. So after 20 years, the company has grown to become the largest financial institution in the market. The SSI stock has a large capitalization value in the VN30 with a strong and stable growth rate. This will be a long-term investment option, bringing great returns to the investor. The last company is in the construction and real estate industry. So according to the Vietnam Real Estate Association, despite the COVID-19 pandemic, the Vietnam real estate market in 2021 is still receiving many positive signals. The Ho Chi Minh City Technical Infrastructure Investment Joint Stock Company was established in 2001 as a financial investment organization operating under the model of public joint stock company. The HSC raised its recommendation for CI to buy from Orbit with a target price of 23,500 VND, even though the 3rd quarter results were severely impacted by the COVID-19 pandemic. So, coming to the average annual return, looking at the table, it's easy to point out the 4 stocks that have the best ARR in BCG, DXR, MBT, and MBB, with more than 30% of ARR. These stocks are the most likely to gain profits for the investor. The next is the DCM. The SSE have less attractive returns than these stocks mentioned above. However, the results also indicate good opportunities for this stock in a long-term investment. The HSG and GDM rates of return are considered mostly average compared to the VN index. The Hoa Sang Group AAR is slightly lower than the average of the stock market. But the TDM with the 19.85 is a good enough to be concerned. The last two stocks in the watch list is IMB with 4.48% and the CII do not display a high chance of gaining profits. Additionally, the CII with a negative rate of returns generate a great loss. So in order to make a wiser and better decision about which stock to invest in, it's necessary for the investor to review the list and compare the two risks. So coming to the average annual risk, the FPT has a lowest standard deviation, 24.54% in our global portfolio, indicating that due to its low volatility related to the others, the FPT stock cannot offer as many significant success opportunities as the others, with the respective standard deviations. IMB, MBB, GMB, and CII, which are somewhat higher than FPT stock, also so that they are reliable with safe and consistent volatility. Meanwhile, the DCT and the SCG has the highest and second highest standard deviations, respectively 45.37% and 44.48% in turn. These two stocks offer investors an excellent possibility of breaking out, but they also carry the most risk in comparison to DCM and SSI. As also BHR, they have the third and fourth biggest standard deviations, 39.99% and 37.79% respectively, indicating a slight amount of risk.
Okay, after researching these business situations and calculations, the result gave us the general look for our watch list. We would use the calculated data to sketch the risk and return charts. While we would all like to find the ideal investment with minimal risk and great returns, the reality is that such a thing does not exist because risk and return are inversely proportional. This means that while low-risk investments provide a secure attitude, they typically provide a lower long-term return than high-risk ones. We'll combine all of the data and create risk and return chart for 10 companies in our watch list to determine our group portfolio. As you can see in the slide, the picture of risk and return chart, the x-axis shows the potential for profits from our investment, while the y-axis depicts the annual risk. According to the risk-reward trade-off, the greater the risk, the greater the reward, and vice versa. And also, the amount of investment can yield more significant benefits only if they are willing to take a greater risk or loss. So, based on the risk and return trade-off, we decided to preferentially select those stocks with high return and low risk among our watch list. From the results of average annual return and standard deviation that we calculated, there are 5 final stocks we will consider investing in. Firstly, FPT will be a profitable stock having an average annual return of 33.3%, while its risk is just about 26.02%. It is believed that FPT can provide us with a high level of returns while facing a low degree of risk. The second stock that we would like to choose is MBB in banking, which has 32.56% of the average annual return. However, its degree of risk is moderately high, so that we have to accept the larger losses. The next 2 stocks we would like to choose are GMD and DCM, which show an average annual return of 19.85% and 26.33% respectively. With this choice, we are also cautioned to bear the more likelihood of losses because of the higher levels of risk, 33.07% and 35.67%. Finally, a stock with the highest return of 37.63% is PHR, but we generally should make the risk and return trade-off with the aggressive rate of risk is 37.79%. So to sum up, we will choose 5 final chosen stocks is FPT, MBB, GMD, DCM, and PHR.
The fifth part is the discussion on the annual average return, and it included 3 smaller parts that are the market portfolio, group portfolio, and income stock. Coming to the fourth part, the market portfolio. The Vietnam Index technical diagram indicates the price fluctuation of all securities listed on the whole stock exchange. Therefore, using this chart we assist in getting an overview of the entire market rather than focusing on a single code. And after calculating, we get a result that from 2016 to 2021, the annual average return were approximately 16%, which is relatively high and stable, even though the entire economy was significantly impacted by the pandemic early in 2020. Also, we have summarized several opportunities for investment. According to an article published on the website of the Communist Party of Vietnam, there were 651 listed firms on the Vietnam Index Board, accounting for up to 37% of publicly traded company and 82% of market capitalization, with a net profit gain of around 21.5%. This company net profit are also predicted to increase by 26% in 2021 compared to the same period last year. Furthermore, market prospects for the last 2 months of 2020 and 21 are generally good as a result of predicted business performance that have recovered substantially in the fourth quarter. These features reflect and indicate the potential for an attractive return on stock invested in holistic firm in 2021 final month. For the group portfolio, our group has two main options that are make the investment equally, and the second option is make the investment optimally to maximize the annual average return. In our portfolio, there are 5 firms including MBB, FPT, GMB, BIR, and DCM. If we do the first option that make the investment equally, and if the stock accounted for 20% of the capital investment, the annual average return will be approximately 30%, which is higher than the market portfolio annual average return than approximately 14%. But if we do the second option that make the investment to maximize the annual average return, the outcome would be 37.63%, which is higher than the first alternative. However, this option entails greater risk on investment. Therefore, our group has decided to choose the first option that make the investments equally. Okay, let's have a closer and more detailed look on the annual average return of this stock. And the first stock is MBB. The reason why we choose this stock is because investment on a bank stock is a secure option that does not rely on external variable and is difficult to bankrupt. Also, MBB has a 32.56% annual average return, which is substantially greater than the market portfolio annual average return of 16.55%, and making it an ideal and steady long-term investment option. The second stock is FPT, belongs to an information technology company. The reason why we chose to invest in this stock because technology domains have become increasingly appealing in the fall era, attracting greater capital investment. When compared to the other investment in the portfolio, FPT stock has a relative high annual average return of 33.3%. Therefore, in the perspective of the investor, this stock would be a wise investment. And the third stock is GMB. We have researched on the internet that although the Steamboat Station Chester has existed for a long time, it has never been outdated. It benefits not only the domestic shipping route but also has to promote international trade. Steamboat Station will rebound substantially, particularly after the pandemic, generating a net profit on the strong growth momentum. GMB stock would be a relatively good investment with 90.58%. 85% of the annual average return. And the first stock is BIR. Invested in BIR, a prominent stock on the stock exchange with a valuation that has climbed 5 times in 3 years since 2017, is a risky option for the investor. However, BIR stock with the credit annual average return in the portfolio up to 37.63% would be a potential investment at the end of 2021 and the beginning of 2020. And the final stock is DCM. According to the Công luận online newspaper for many years, Cà Mau Fertilizer Company has worked hard to achieve efficient and long-term growth while providing maximum value to its shareholders and customers. The company has reached a new record income of up to 7,700 billion on its 10-year anniversary, exceeding 11% of the target. The optimal profit is more than 760 billion Vietnam dong, exceeding 40% of the target and increasing by 55% over the previous year 2020. Hence, the DCM stock would be appealing to an investor with the annual average return of 26.33%.
Following the previous part, I would like to present about the result of the total risk that we have calculated and give comments about that of each of the stock, the market portfolio, and lastly the group portfolio. Firstly, to calculate total risk, we use yearly variance and the standard deviation, which is the statistical measure of the market volatilities that determines how far price differs from the average. However, to give more specific comments, the group has calculated the average annual rate of each stock
as shown as the last column on the right of the table. Firstly, we have MBB, the stock of MB Bank. This stock has the median average annual return and yearly standard deviation among the selected stock. During researching, the group find out that MB Bank has improved asset quality to the safest group in the industry, along with the ratio of provision covering bad debt higher than 250%. This can reduce the risk when we invest in MBB. Following that, FPT had a smaller yearly standard deviation with a smaller average annual return of MBB, which means investing on FPT bear a lower level of risk and return than that of MBB. FPT is counted as a secure stock, and its main business activities have maintained the positive cash flow for 4 years in a row, as well as good financial strength and the annual cash dividend for the shareholder. GMD is a stock with the median total risk, but the average annual return is quite low. However, with the popularity of the industry, thanks to the increase of sea-freight rate, we expect a higher return in the stock in the future. However, there's still some upside risks that can be mentioned, such as higher than expected output and service pricing, as well as high price access divestment. Next, we have PHR, the stock that has the highest standard deviation and also the highest average annual return. In other words, investing on PHR is a reckless strategy since this stock is popular on the stock exchange market, with the value has increased 5 times in 3 years starting from 2017. And finally, DCM has the standard deviation the second highest in comparison with other stocks, and the return of this stock comes from many events, including the holding company, which is PVN, ensuring its ROE of Urana segment reached 12%, and the change in Vietnam VAT policy in 2019, forecasting its gross profit margins to increase by 3 to 4%. However, we can mention about the main risk, which is the unclear gas price that leads to the reduction of positive impact, the change in VAT policy. We have the market portfolio, different from the stock selected, having a high statistic of the total risk and average annual return. That of the market, which is illustrated by the VN index, is known for much lower. Overall, the VN index is representative for the stock market. By that, any change affecting this market can adjust the VN index statistic. For instance, the trade war, the inclination of the constrained cash flow, or the rising interest rate caused the market movement to plummet in 2018. As a result of this issue, the VN index has the high level of volatility, ranking among the top 10 of most volatile stock index in the world. Lastly, we have our group portfolio. In this case, we assume that the capital would be equally invested in these 5 stocks, which means each stock accounts for 20%, and from that, the teams have forecast the average annual return to be 29.93% and the standard deviation to be 23.45%. With that total risk, the investor can either earn twice the profits or lose almost the investment if the best and the worst situation happen. Although the economy has many uncertainty affecting the stock market in previous year, as I have mentioned, investing in 5 stocks mentioned above had the attractive level of risk and annual return, which can be said to be the good investment with a high risk, high return in the future.
Okay, next we read the second part of today's presentation. It is calculate and give color on the systematic risk beta coefficients. For an upward refined chosen stock, although their beta coefficient is a little bit different from others, but we select it because there are 7 difference. So first of all, the military joint stock MB Bank is among one of the most Vietnam digital saving company in 2021, and they face offer in the top 10 Vietnam most precious commercial bank. And although they have a really high beta coefficients at 1.29 over 5 years, while its beta coefficient today about 120 weeks count, the latest one is 0.75, and it's really stable. Next we move to the FPT. FPT, as we know, is out their awareness ranked at 3rd place in 2021, most predictable technology company in 2021, and they have okay, really great beta coefficients at 0.97. Next is GMD. GMD with a really impressive beta coefficients as 1, and this is also in the top 10 of Asian strong brand in 2020. And the very last two stock is PHR and BCM with their beta coefficients as 0.96 and 0.81 over 5 years respectively. With the market as our research, as our group research, the EMA step market beta coefficients is equal to 1. Therefore, we divide it into 3 states to compare to the market. And for the first state is low volatility. If the beta coefficient is smaller than 1, we have the stock is equity, ECM, and PHR. The second one is the beta coefficient equal to 1. This is the same as the market. We have the GMD, and the last one, higher than 1 beta coefficient is MBB. A little bit unstable, but this is okay. We have the group portfolio. The group portfolio, as we can see clearly that whenever the investment is made equally, the market beta coefficient portfolio reach 1.0047. Still at the same at VM in this statistic, it the appearance of our market beta figure. Thus, that if I7 chooses stock who can smoothly enroll in this market as what we expect in the real world.
In this session, we will calculate the optimal way of each stock to serve our two targets. First, to minimize the risk, we need the variance and standard deviation of our group portfolio. And the second is maximize the average annual revenue, the AAR. Then we will have a small comparison about it. So we get the list, variance or standard deviation of our group portfolio. We will use the base formula of the volatility of group portfolio. It means this matrix multiplication, and we will use Excel solver for this problem. And according to the Excel solver, I can calculate this is a way of each stock we need to budget to have the minimum risk. Then, as you can see, the minimum risk with the variance standard deviation of the group portfolio is about 1.16% to the variance and 22.71% to the standard deviation. It's slightly little smaller than when we equally invest to each stock. And about when we want to maximize the average annual revenue, average return is AAR. We will buy all of the stock which had highest AAR. Like in this case, we will have to buy 100% is BHR, and in this case, the AAR in this group portfolio is higher, but the standard deviation and the variance is also higher, so it's more risk and more return for the investment. And now we will have some small comparison that when we have equally invest, when we use the option to minimize the variance on the standard deviation and maximize the AAR. So as you can see, the AAR is increasing based on each way what we choose, but the standard deviation is so unbalanced that you need to pay attention to. And we assume that the risk and the return is normally distributed like we had in SB, and I calculate the percentage that the investor cannot cover in the initial investment, which means their return is below 0%. In the equally invest option is about 10%. About when we want to minimize the risk, it's about 9%. And when we want to maximize the AAR with the means, the higher means, is the percentage that they cannot recover their initial investment is nearly 16%. So we need to pay attention to this to choose the best option for us. However, it's just assume that it's a normal distribution, but the actual or the realistic will not happen like this. So it's just like a case for us to follow and can be a guideline for us to consider. So that is the end of our presentation. I hope you can find this presentation well with you. Thank you.